Hello everyone, and welcome back to the channel where we demystify the markets and uncover unique trading opportunities. Today, we're diving deep into a stock that's showing some fascinating hard-to-borrow characteristics, BJDX Inc., ticker symbol BJDX. This medical device company has landed squarely on our screener, and we're going to break down exactly why. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's kick things off with a quick look at BJDX itself. BJDX Inc. operates in the healthcare/medical devices sector with a current market cap of just $1.04 million. They're behind the Symphony technology platform, which features an analyzer and single-use protein detection cartridges designed to measure key diagnostic biomarkers in blood. It's an intriguing space, but what's really caught our attention are the mechanics surrounding its tradability, especially for short sellers. To chart BJDX price action. Looking at the recent price action, BJDX saw a plus 8.0% gain today, which is certainly notable. However, this comes after a tougher period, with the stock down minus 3.57% over the last 5 days and a significant minus 68.89% over the last 30 days. Volume-wise, today saw 4,257,600 shares traded, but that's actually only about 0.5 times its 30-day average volume of 8,069,966 shares. What is cost to borrow and why it matters? So, what exactly does it mean when a stock is hard to borrow, and why is that important? When you short a stock, you're essentially borrowing shares from someone, selling them, and hoping to buy them back later at a lower price to return them. Just like renting a car, there's a fee involved. That's your cost to borrow, or CTB. This fee is paid annually, and it can fluctuate wildly depending on the demand to short a stock and the supply of shares available to borrow. When a stock becomes hard to borrow, it means there are very few shares available, and short sellers are desperate to get their hands on them. This pushes the CTB fee sky high, sometimes even well over 100% annualized, meaning it costs more than the stock's value just to hold a short position for a year. Why this stock is hard to borrow right now. Now, let's apply this to BJDX. BJDX is a prime example of a hard to borrow stock right now. The annualized cost to borrow fee is an astronomical 745.4%. To put that in perspective, holding a short position in BJDX for just a few weeks or months can quickly erode any potential profits due to these exorbitant fees. Highlight CTB. We've also seen the CTB momentum shift by minus 228 percentage points over the last 5 trading days, meaning that while the fee has come down from an even higher peak, it remains at an exceptionally punitive level. The scarcity is real. There are currently only 2,000 shares available to borrow. With an estimated float of just 0.9 million shares, this tiny pool of borrowable shares is a critical data point. Squeeze mechanics explained. This brings us to the potential for a short squeeze. A short squeeze occurs when a stock's price starts to rise, forcing short sellers to buy back shares to limit their losses. In a low float, high CTB scenario like BJDX, this can create a frantic rush. As the price climbs, and short sellers try to cover their positions, they are effectively adding buying pressure to a market with limited supply, which can send the price even higher, trapping more short sellers in a vicious cycle. Our internal composite squeeze score for BJDX currently stands at 56.0 out of 100, which indicates a moderate level of squeeze potential based on a combination of factors including a CTB, borrower supply, float, and price momentum. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have incredibly strong conviction that the stock's fundamentals are weak, and they are willing to pay steep fees to maintain their bearish bets. Dilution risk check. One major factor that can completely derail a short squeeze is dilution. Dilution happens when a company issues new shares, increasing the total number of outstanding shares. This can flood the market with supply, often depressing the share price and making it much harder for a short squeeze to take hold, even with high borrow fees. For BJDX, a check for recent dilutive SEC filings like -1s, -3s, or 424 BS in the last 90 days found no concerns. This is a positive sign for any short squeeze thesis, as it means the immediate threat of new share issuance isn't present from those typical avenues. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For BJDX, what should you be watching if you're interested in this dynamic? Keep an eye on the borrow desk data. How quickly are those 2,000 available shares being taken? Is the cost to borrow fee continuing its momentum downwards, or is it stabilizing, or even increasing again? Short data points pay attention to sudden spikes in volume, especially on green days. Increased buying pressure with such a limited float and high shorting costs could be the catalyst for a more significant move. Also, monitor any fundamental news from BJDX Inc. that could either strengthen or weaken the conviction of short sellers. BJDX Inc., or BJDX, presents a fascinating case study in the hard-to-borrow universe. With its sky-high 745.4% cost to borrow, extremely limited supply of shares to short, and a relatively small float, that certainly ticks many boxes for a stock exhibiting squeeze characteristics. Remember, navigating these types of situations requires careful research and understanding of the underlying mechanics. We hope this deep dive into BJDX has provided valuable insights into how these market forces play out. If you found this breakdown helpful, please give this video a like, subscribe to the channel for more educational content, and let us know in the comments below what other hard-to-borrow stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next video.